Guys, this is Sec4. I'm recording a video now. I want to show you some examples of stop loss placement. I've prepared a number of examples and we're going to begin right now. Actually, basically the rule of the thumb as far as stop loss placement is concerned, at least in my point of view, is that stop loss should be placed few pips behind the event that got me into the trade. Okay, in my opinion, enduring larger than necessary stop losses is it's basically a mistake. Okay, it's best if the actual entry, the actual event that got you pushing the entry button, okay, on your trader station is violated, you are better off getting off the trade with a small loss. And then search for a new entry later on. Okay, I think it's a big mistake to put your stop loss behind your next level of support or resistance of whatever. If the very level of support or resistance you are basing your trade on is violated, then that entry is not valid anymore. If think about it, if that level didn't hold, okay, if that level of support and resistance didn't hold in the first time, would have you entered that trade? No, you wouldn't have. Okay, the reason as of why you've entered that trade is because that precise level is holding for the time being. So if that level, once you are in the trade, if that level is broken, then why would you keep the trade open? Okay, just exit out, take a small loss, all right, and search for the next trade. Okay. That's my policy as far as stop losses is concerned. I like to keep my stop losses as minimum as possible, all right, and that's about it. All right, now we're gonna start with a trade that I'm actually following right now. Is the Euro GBP in the 30-minute chart. This is actually live chart right now. Okay. Anyway, I don't want to focus on the trade in this video. I don't want to just confuse you guys. I'm going to be talking about stop loss placement in this case. All right. Basically, trading, as you can see, in the direction of the main trend, moving averages the way they should. Blah blah. A new swing down, overnight consolidation. We broke down this range. We have just pulled back and retested the bottom of that range right there. You see there, we broke down. We broke out the range. We've retested that level of support of resistance. It seems like it's holding. Okay, all this level that had been working as support in the Tokyo session, it's now working in the London session as resistance. This was support, this is now resistance, okay, and if we make a new low, I will trigger my short entry. Where is my stop loss to be placed? Just a couple of pips above there, okay. Actually, I've punched in my sell stop order already, alright. As we pip below, my trigger will be, my entry will be triggered, and this is my stop loss, just 1-2 pips above the tip of this retracement, above the high of this bar, okay. Some people would actually leave their stop losses above the overnight range. We've been ranging here overnight, and they say, okay, if the range bottom didn't work, perhaps the range top will work as resistance. My understanding is, why would you stretch your stop loss? You are basing your trade on the fact that this level, former support, okay, is now working as resistance. If upon entry, imagine price decides to retrace and takes out this level, okay, you wouldn't have taken this trade on the first in the first time, right? So why would you keep it open? If this level that's been the actual base of your trade, okay, what you've actually based this trade on is broken, then the trade is valid no more. This breakout is valid no more. So just close out, okay, and that's about it. All right. So like I say, in a pattern breakout, okay, you guys know, if you read the breakout chapter, the way I trade my breakouts is we have a thrust up, then we have the period of consolidation. The way I trade breakouts is wait for the breakout, the pullback, and the continuation aspects. Okay, you can read all about this in the breakout section, the 1, 2, 3 aspects. My stop losses, my entries always when we take out the initial breakout thrust, meaning the in this case this thrust, okay, the breakout thrust. Then we have the aspect number 2, the pullback, which is this this portion of the chart. And now if we continue to the downside, right there I will trigger my short entry right there. My stop loss is going to be placed below the pullback, okay, 1-2 pips below the pullback, right there. You see that? All right, is that clear enough? I hope so. Okay, that's how I place my stop losses on breakouts. Okay, all right, let's go now for the next example. The next example is the New Zealand on the against the American dollar. New Zealand dollar against the American dollar on the 1 hour time frame. There are a number of formations here to be traded. It's a clear downtrend, okay? And personally looking into this clear, oops, sorry about that, into this crystal clear flag formation. This is the ball of the flag, and this is the flag in itself, very clear. As it breaks to the downside in there, it's time to zoom for the shorter time frame, for the trigger frame on the 15-minute charts. We saw clearly that we had the breakout, the pullback to breakout level, and from there we made a lower low, okay, beginning a new swing down. So if you tag this entry right there as you make a new low, where's the stop to be placed? In the right behind, as usual, the band that got us into the trade, meaning this breakout pullback continuation aspect right there. Okay, a couple of pips above the tip of the pullback. Okay, right there. All right, let's go back to the 1 hour chart once again. Some people would argue to there is I don't know, put the stop loss perhaps above the 30 or the 50 simple moving average, hoping that if this level breaks to the upside, the dynamic area of support and resistance will hold the move to the upside. In my opinion, it's best to exit right there, and as price moves up to the area of dynamic support and resistance, then you will reassess. It's best to get out, and when price reaches a new area of resistance, reassess the situation, and if you're gonna enter, well, then you re-enter at a better price up here. Okay, anyway, what's the cost? It's just 4, 3, 5 pips maximum, depending on your broker, which is the spread. Okay, you can get in a trade anytime you wish. You just pay another 3 or 4 pips in of a spread, and you are in. Okay, again, so just get out as soon as possible. Don't eat any doldrum. Wait for price to reach the next area of level and support level of support and resistance, and reassess the situation once there, if you want to re-enter or not. Okay, all right, next example. All right, we are now looking into the Swiss franc against the Japanese yen. I want to show you how to I place my stop losses on the 1, 2, 3 formations, reversal formations, right off. I'm going to be looking into this swing, okay, this swing up for an entry right there, right off the dynamic area of resistance. Okay, so as usual, as we have a nice swing up, then we go through the retracement section of the swing, and as soon as we hit the area of dynamic resistance, I zoom into the trigger chart, searching for reversal formations. In this case, let me mark this area and zoom into the trigger chart, which in this case is the 15 minutes chart right there. As usual, we always have to mark the retracement trend line. Okay, that's it. And we soon find this is the area of dynamic support and resistance in the setup chart. Okay, and we see 1, 2, 3 formation with a trend line break, making new highs. That would be our entry. All right, our long entry. Where's the stop loss to be? Well, the stop loss to be is behind the event that got me into the trade. The event that got me into the trade is this 1, 2, 3 reversal formation, isn't it? Okay, so there are two ways of trading, of placing your stop losses on a 1, 2, 3 reversal formation. Okay. One of them is the conservative way, placing your stop loss below the low of the whole formation. Okay, I mean below the aspect number 1, and the aggressive way is below the aspect number 3. I personally place my stop below the aspect number 3. I like to keep my stop losses as minimum as possible, because if let's say I enter right there, price goes up, but then decides to turn around and makes a new low. Okay, a 1, 2, 3 formation is all about in a downswing, when you are making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, then you make a higher low, and finally you make higher highs. That's what a reversal formation is all about. Okay, basically you break the pattern, okay, that that you've been you've just seen in the chart. Okay, I repeat, 1, 2, 3 is basically nothing but breaking this pattern: low, lower high, lower low, lower high, lower low, lower high, lower low, another high, a final high, and then a higher low. You see the higher low right there? You see that? And then you make new highs. All right, you see this reversal formation breaks the pattern that we've just been going through during this retracement area. Okay, that's what a reversal formation is all about. So if I have this 1, 2, 3 formation, okay, I enter my entry, price goes up but turns around and begins to make again lower lows, then that's not a reversal pattern anymore, guys. That's the reversal pattern. The very nature of the pattern is broken. Okay, the nature of the reversal pattern is making higher lows as opposed to lower lows. You see all those lower lows there? Okay, so that's why I personally play the 1, 2, 3 formation, placing my stop loss below the aspect number 3 as opposed to below the aspect number 1. Alright, okay, next example. Okay, next example is the euro against the CHF in the 1 hour time frame. In this case, I'm going to be trading, or I'm going to be showing you how to trade a breakout of one particular level of support and resistance, and more specifically where to place the stop loss. Okay, it's basically nothing but a triangle breakout. Okay, you see the triangle? Oh Jesus, 1 second, guys, sorry about that. That's a triangle. See, you have, it's a flat top triangle. Okay, you have a level that's been working as a triple top, once, twice, and 3 times, whereas you are making higher lows. Okay, it's basically a flat top triangle. I will not lie to you, guys, it's basically the same thing again. Wait for the breakout, the pullback, the continuation pattern and place the stop loss behind the pullback in the setup chart. Okay, obviously I'm trading in the direction of, we are trading in the direction of the moving averages, meaning the market sentiment building pressure to the upside, and eventually this level gives way to the upside, okay, with a breakout right there. Okay, let's this is the hourly chart, so our trigger chart will be the 15-minute chart. That's the area where the breakout takes place. Breakout, retrace, and it makes a higher low right there. Okay, that's where we trigger the long entry. Breakout, retrace, off it goes. Where's the stop loss? Right there. Okay, this is the retracement, the pullback. Okay, this is the breakout. Whoop, sorry about that. This is the breakout. This is the pullback, and we make a higher high right there, and this is a continuation. It took a little bit of time to take off, but nonetheless it eventually did, and off it went for a new swing to the upside. Okay, so once again, stop loss, where is to be placed? As usual, below, few pips below the pullback. This is the pullback, so the stop loss is to be placed right there. Okay, breakout, stop loss, pullback, continuation, make new highs, stop loss below the pullback. Okay, it's basically the same routine always for any type of breakout. It's, like I say, is the way I personally try them, and the way I personally place my stop in any type of trade. Okay, always behind the event that got me into the trade. Okay, just ask yourself, okay, why am I taking this trade? Okay, why am I pushing the buy or sell button at this precise moment? Well, I am pushing the button because of this breakout formation, nothing else. Okay, that's the very reason as of why I'm pushing the bottom. Okay, well, if I am pushing the bottom because of this event, if this event is violated, if price retraces and makes a lower low, I'm interested in this setup no longer, so I am out of the trade. Okay, always ask yourself, what's getting me into the trade? Place your stop loss few pips below that or above that in for a short entry, and you will be picking the right spot for a stop loss, as far as I am concerned, at least as far as my understanding of stop loss placement should be. Alright guys, if for whatever reason you have a setup that you can't find, or you didn't know where to place your stop or whatever, I'll tell you what, just send me the chart, okay, send me an email, and I'll let you know where I would personally, in that precise setup, where I would personally place my stop loss. Alright, but like I say, it's always the same thing. Okay, it's always the same routine. Ask yourself, why are you getting in? Place your stop loss few pips below, and you're good to go. Alright, okay guys, that was all. Bye bye.